Hello and welcome to today's in-depth news update. Tonight, we focus on a major policy shift by the administration of United States President Donald Trump that directly affects millions of Americans struggling with student loan debt. For the first time since the COVID-19 pandemic began, the federal government is preparing to resume wage garnishment for borrowers who have defaulted on their student loans, according to the U.S. Department of Education. Notices will begin reaching affected borrowers starting January 7th, marking a significant change in federal student loan enforcement. This move comes at a time when the U.S. labor market is cooling, unemployment is rising, and economic pressure is mounting on households across the country. In this detailed report, we will explain what wage garnishment means, who will be affected, how much money can be taken, and why this decision is drawing strong criticism, especially as millions of Americans already struggle to make ends meet. The Trump administration has confirmed that it will begin garnishing wages from borrowers who have defaulted on their federal student loans, ending a pause on aggressive collections that has remained in place since the onset of the COVID-19 pandemic. A spokesperson for the Department of Education told Al Jazeera that affected borrowers will start receiving official notices on January 7th. These notices will inform borrowers that the federal government intends to collect unpaid student loan debt directly from their paychecks. Initially, the policy is expected to affect approximately 1,000 borrowers, but officials have confirmed that this number will increase gradually over time. According to the department, the scale of wage garnishment notices will expand month by month, signaling that this is only the beginning of a broader enforcement effort. When asked how borrowers were selected for the first round of garnishments, how many more people may be affected, and what criteria were used, the Department of Education did not provide specific details. However, the agency stated that collections are carried out only after student and parent borrowers have been given sufficient notice and an opportunity to repay their loans. Under federal law, the U.S. government is allowed to garnish up to 15% of a borrower's take-home pay. However, there is a legal safeguard in place. The borrower must be left with at least 30 times the federal minimum wage per week. The federal minimum wage currently stands at $7.25 per hour, a rate that has not changed since July 2009. This means borrowers earning low wages could still see a significant portion of their income withheld, even as living costs continue to rise. Student loan debt remains a massive issue in the United States. About 1 in 6 American adults hold student loan debt, with the total amount reaching approximately $1.6 trillion. According to the Department of Education, more than 5 million borrowers had not made a payment in at least a year as of April, placing them at risk of default. And now, wage garnishment. The timing of this policy has raised serious concerns. The decision comes during a period of economic strain, marked by rising prices, slowing job growth, and increasing unemployment. According to the consulting firm Challenger, Gray & Christmas, more than 1.1 million people lost their jobs in 2025 as the labor market cooled. Federal employment data shows mixed trends, with job losses reported in October, followed by only modest gains in November. During October and November, the unemployment rate rose to 4.6%, the highest level since 2021, according to the U.S. Department of Labor's Bureau of Labor Statistics. This means millions of Americans are facing job insecurity or reduced income at the same time the government is preparing to deduct money directly from wages. Critics argue that the policy places additional strain on families already living on the financial edge. Julie Margetta Morgan, a former deputy undersecretary at the Department of Education under former President Joe Biden, strongly criticized the move. She told Al Jazeera that families are being forced to choose between paying their bills and putting food on the table. According to her, the Trump administration's decision to resume wage garnishment takes away even that limited choice from borrowers who are already struggling to survive. Morgan argued that instead of addressing the affordability crisis that has left millions of Americans unable to repay their student loans, the administration is punishing families further. She warned that wage garnishment could force borrowers to forego basic necessities, including food, housing, and health care. Beyond wage garnishment, the federal government has broad authority to collect unpaid student loans. In addition to paychecks, the government can also garnish tax refunds, Social Security benefits, and certain disability payments. This means even retirees and individuals receiving fixed incomes may not be protected from collections. Supporters of stricter enforcement argue that student loan repayment is a legal obligation and that long-term defaults place a burden on taxpayers. However, opponents counter that the current economic climate makes aggressive collections especially harmful, particularly when wages have not kept pace with inflation and the minimum wage remains unchanged for more than a decade. The resumption of wage garnishment signals a clear policy direction from the Trump administration, prioritizing debt collection enforcement at a time when economic uncertainty continues to grow. With millions of borrowers already behind on payments, many fear that this move could deepen financial hardship and widen economic inequality. As notices begin going out on January 7th, borrowers across the country will be watching closely to see how far and how fast the policy expands and whether any relief measures will accompany it. To sum up, the Trump administration's decision to resume wage garnishment for student loan defaulters marks a major turning point in federal student loan policy. Starting January 7th, borrowers who have defaulted will begin receiving notices, with the number of affected individuals expected to grow steadily over time. This move comes amid rising unemployment, slowing job growth, and increasing financial pressure on American households, intensifying concerns about its impact on vulnerable families. While federal law allows the government to garnish wages and other income sources, critics argue that the policy risks pushing struggling borrowers even closer to financial collapse. As the situation develops, the debate over student loan affordability, economic fairness, and government enforcement is likely to grow louder. Thank you for watching this detailed update. Stay informed, stay engaged, and we'll continue bringing you the stories that matter most.